So we got a very important video today about the Apple iPhone 17 and how that's going to affect Apple's stock. So there's a strong iPhone 17 appetite that has skyrocketed the demand and the stock price on Apple. So let's get into it. Apple's iPhone 17 launch is turning out to be far more powerful than many expected, with early indicators showing a surge in consumer demand that stretches across key markets. Pre orders have outpaced last year's cycle, shipping times are extending, and Apple has already asked suppliers to boost production of its entry level models. This wave of interest has prompted JP Morgan to raise its stock price target for Apple, signaling renewed confidence in the company's growth trajectory and its ability to drive momentum through its flagship product line. What the indicators are showing. Several early signals suggest that the iPhone 7 launch is seeing stronger than expected consumer appetite. Pre order demand is robust, so early pre orders for the iPhone 17, including the base model and the newer Air version, are ahead of the comparable period last year. Extended shipping times in many markets hint that demand is exceeding supply in the short term. Preference for the more accessible models is another factor as well. So the standard iPhone 17, which is around $800, appears to be outselling expectations, especially relative to the premium Pro models. Some buyers seem attracted by the improvements in camera and screen features that Apple has migrated from Pro only to the standard version. And then another indicator is supply chain tweaks. So Apple has asked suppliers, notably Luxshare Precision and Foxconn, to increase production of the entry-level iPhone 17 by around 30 to 40% following the pre-order surge. So these indicators counter some concerns going into the launch that demand might be soft due to factors like inflation, elongated upgrade cycles, or fewer must-have feature upgrades. So what is JP Morgan's response? Raising the bar. In light of these demand signals, JP Morgan has adjusted its outlook in several key ways. The price target has been raised, so the firm lifted its Apple stock price target from $255 to $280, and this rating remains overweight. Shipping projected higher. So iPhone shipment volume is now forecast by JP Morgan to be around 236 million units in fiscal 2026, up about 2% year over year. You also have revenue growth expectations, so they expect iPhone revenue to grow mid to high single digits, helped by a favorable mix, more sales of base and mid-tier models, and stronger demand. And then also long-term momentum. So planning is already looking ahead to future product cycles, including a foldable iPhone, which is expected in late 2026, which JP Morgan sees as a contributor to stronger growth in fiscal year 2027 for Apple. So what are the implications and the risks? Well, while the signs are encouraging, there are several considerations that could limit or complicate upside. Margin pressure. So if more consumers gravitate towards lower margin models, for example, the standard iPhone 17 rather than the Pro or Pro Max, this could put downward pressure on gross margins even if revenues rise. Another risk is operating expenses. So JP Morgan notes that Apple is investing heavily in its Apple Intelligence efforts. So AI, software, services. These investments may boost future returns, but they also increase expenses in the near term, which could offset some earnings gains. Another implication and risk is upgrade cycle uncertainties. So while delayed upgrades, which basically just means users holding off to replace older iPhones, seem to be helping demand this year with these cycles, and these cycles tend to be uneven. So Apple's ability to sustain or improve upgrade rates will matter. And then lastly, competition and macro risks. So rising interest rates, economic slowdowns, or competitive pressure in the markets like China could moderate consumer spending or affect Apple's cost structure and supply chains. And again, this is all hypothetical. So the verdict, is this a big deal? And the answer is yes. So strengthening demand and JP Morgan's more bullish forecast do matter for several reasons. It suggests Apple may have avoided a slump in iPhone sales that many had feared, especially given inflationary headwinds and slower upgrade cycles in recent years. The pricing, sales mix, and volume gains combine to deliver upside not just in revenue, but in investor sentiment. And that's reflected in the stock price target bump and more favorable analyst views. So, if Apple can maintain momentum through the iPhone 17 cycle and execute on feature product launches like a foldable iPhone, new AI features, it could set up a stronger multi-year run for both profits and the stock. Anyway, folks, and by the way, remember, do not take the risky unless you're willing to do the frisky. All right, that's all for now. Bye-bye.